Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, May the 25th, 2010. Well, we have a continuation of the trend to the upside today with a candle making a higher high and a higher low. But we have a very small body with a long shadow on the top and a shadow on the bottom, and that's a spinning top type candle, and that denotes indecision. So it really says something about the lack of strength in this first time frame uptrend that the market's in. The small body means that the buyers have made a very small amount of net bullish progress on the day, and certainly much smaller than the previous day, and that is one thing that raises doubt about this market continuing to the upside. The other is the long shadow on the top. It represents downside price rejection. It represents the buyers losing the commitment that they had when the market traded around these levels. And also the shadow on the bottom represents upside price rejection and the sellers losing commitment that they had. So both buyers and sellers lost commitment on the trading day. And that's why there's a lot of indecision in this market. The market also traded up to the previous high here around the 87.40 region, and the sellers came in and closed the market back down below this 86.87 level as well, which was potentially a level of resistance for the market. The market then traded down and found support below the 86 level, which it's done previously, and also at the Tenkan-sen, the green line, the market found buyers coming in there. So a very indecisive trading day. We really do need to watch the high of the current candle for the potential for the market to take out this area. We also need to watch the low of the current candle for the market to potentially take that out and create a downtrend, and there is potential for a new first time frame downtrend, and that's because of the indecision in the market. Now we also have potential for a particular type of pattern here, and it's a double top, and here we have the first peak, the intervening trough, and now the market potentially making another peak if the market does come off and form a lower high and a lower low. Completion of that pattern will be the intermediate low at 85.14 being taken out with a close down below that level. If the market trades down below there but fails to close down below there, then it's not a completion of the pattern. So completion would be that area taken out, and I'd like to see a bearish close down below there. We can project a target from this, and it would be the distance from the highest peak in here to the trough projected down to the downside, so probably down around this region, which would coincide with roughly about 84, which is a level where the Tenkan-sen or the Kijun-sen is at. Now the market is trading up above the clouds, so the market has an overall positive bias and still trading up above the Kijun-sen and Tenkan-sen, which means that the market is still bullish in the medium-term and fast-term time frames. Only one problem for the market is that the Kijun-sen has turned flat, and quite often when the Kijun-sen turns flat, the price action tends to be attracted back towards it. So there is strong potential for the market to retrace back to the 84.11 area. So this current low becomes even more important considering that there is that potential, and the fact that we have the indecisive candle, and also the intervening low in this potential pattern becomes important. If that's taken out, then there is a good chance that the market will trade down to around this level. So they're the areas that we really do need to watch today. This area up above the 86.87 level is important for a potential continuation, and the area down below here, below the low of the current candle and the intervening trough.